Good afternoon, traders. Welcome in the weekly outlook for next week's trading session. As always, let's start with the euro dollar. We are looking for the correction of this move higher, and we expected already that this correction is going to take a little longer. I think this is some kind of a wave A, maybe a connecting wave. You see my alarm being set here. That's a result of the non-farm payroll. I like this low to be taken out, and that might present a nice buy opportunity. Very simple, something like this. And then I'm looking for the continuation of this move, which makes this move higher. In other words, short term, you have some more bearish potential. What was I looking for during the non-farm payroll? What I said to our group, first of all, this was a potential buy here in terms of a flag formation. We're looking for this low taken out and then the buy. I didn't participate in this short because although this actually turned into a really nice short, the dollar really gained some strength. But like I said, I was looking for the continuation higher for this move here, like some kind of A, B, C, then down and then higher once again. So I didn't participate in the non-farm payroll. I didn't do what I liked. There were some mixed signals, and that usually means that we just have to take a step back for the bigger picture. If you're intraday traded, then go ahead, of course, by all means, and you trade it more actively, I suppose. So that's what I'm looking for the next week for the euro dollar. This is a corrective structure, and I don't think that's over yet. And once that's over, we're gonna test the previous highs by means of more euro dollar strength. That's my view for now, until things change, of course. The pound dollar, and once again, if things change, I will update the pair. The pound dollar, I made a midweek's update where I said that this move higher, there was a clear headline move. There was some news coming out of potential deal or another deal or soft deal, whatever, and that moves the pair. And I already said we have seen that being wiped out pretty often already, and that will continue till we have a deal and we actually know what's going to happen. So what I'm looking for right now, well, this is a potential pattern A, B, and now we have to see lower, which means in the beginning of next week you might have a continuation of this move higher, taking out these highs. Bigger picture, and as you know by now, I guess I'm trading the bigger picture in general, and I fine-tune on lower time frames. I'm looking for correction of this entire move, and this is not enough. All right, so I'm anticipating a continuation higher. Probably if you draw a Fibonacci ratio here, you will see the 38.2 being hit sooner or later before anything else. But keep in mind, we're in this corrective structure here, so everything within this structure, below this high and above this low, is corrective. So if you want to trade in that correction, manage it accordingly. What I tend to do, and that's a little bit of context, because I received some, quite a few questions, especially yesterday and even today, I will emphasize, if you publish them publicly beneath these videos, I will answer them. If you send them privately, that's fine if you're not comfortable doing it publicly, but then keep in mind, I'm not going to go one-on-one with everyone, so then I elaborate it in the next video. Which means, if I say this is a correction, and I'm looking for a continuation of this move here, that means that I'm looking for the buy, because the buy has the potential to move high. That doesn't mean you can't sell it. But if you sell it, you have to keep in mind that it might be very short-lived. Depending on your trading style, you want to sell intraday, yes or no. What I like to do, if I trade intraday, I like to trade intraday with the potential of a bigger picture move. And therefore, you have a tremendous risk-reward. So that means sometimes I'm not trading or executing a trade for an entire day, and that's perfectly fine. And that's what I do for now for more than 15 years, and that works for me. If you have a different style, of course, go ahead. But I'm not able to give you all kind of intraday scenarios, because if I start doing that, then we're all over the place. Then I have to come up with 20 scenarios what might be happening in the next 5 days. So when I say I'm looking for the buy, I'm looking for the buy bigger picture, and that means if you have a lower time frame buy, you have to keep in mind that that buy might actually turn into a major buy, and therefore your risk reward will increase to 5 to 1, 10 to 1, etc., etc. The Aussie dollar is a good example of that. I will go over that in a little bit. So let's recap real quick. This is the corrective structure right now. It's even a bigger correction, but I anticipate this to be the beginning, and therefore I like to see a continuation higher. Other than that, you trade it on lower time frames. If that turns into an acceleration lower, well, that's awesome. So keep in mind that many overlaps will result in a management closely managing your position. The euro pound, I also elaborated on during the week. We saw this drop. I said, don't start selling it now. It needs to correct. Well, I still have my first sell. That's a break even. That's doing, although it's phenomenal. You see, you can do the math, the risk reward, right? If you trade this way, you can wait. You learn to be patient because, well, you see, you can do the math, the risk reward. Anyway, I got another sell here. And I anticipate this to drop further, at least to test at least these lows here, or let's say the 89 for now. If that doesn't happen, well, so be it. Could be that this is some kind of a 1, 2, 3 pattern and we just gonna make that messy move higher once again. But right now, this reversal is no reason for me to take out this short. So I'm still looking at the bigger picture, the daily. I put away C here, wherever that's gonna land. It doesn't really matter to me, but I like to see more downside movement, bearish price action, so to say. So what's a 1 hour time frame doing? Besides it's making a big mess, this definitely looks like a corrective structure, but we're in a big correction anyway. So let's see how this is going to play out. This turns into a nice flag formation. Then you have a nice sell later on. But unfortunately, you have to, this for example is a good example. Let's say this, okay, you come back up, A, B, C. I'm not looking for the buy here. You might say, but after this move higher, and therefore you really have to be consistent is what you're doing, because if something doesn't get triggered, that doesn't mean that you have to trade it the other way. At least that's not how I look at it, because if you would do that, then you might say you were looking for this move here, take out that high. And then you end up with a contracting pattern. So in other words, I'm only looking for sells, which means this is the sell I'm going to take, and which I took, but this is not the buy I'm going to take. Oh, sorry, that's not what I was going. I was going for the arrow. Here we go. You see? So that's how I trade. That's how I look at the market. And I hope that provides you a little bit of context. It's not about jumping in. It's always if then. But I always have a bias. The direction I like to trade because of the big potential. If you want to go against the bias, I mean, of course, it's up to you. My advice is keep a close eye on what's going on, because you might trade against a bigger trend. Dollar yen, well, that's on Monday in our group. I said it's probably going to show a continuation lower. Well, this is a continuation. What's going on here? It's messy. That's all I can say about it. I already elaborate on the yen. The yen is going to be the moving pair, and I don't see it to be ready yet across all the other majors. So this is definitely something that if you want to trade it, my advice is trade it on smaller time frames, manage it accordingly, and well, as you see, every move is going to be wiped out pretty soon. Many overlaps. So hold a buy and hold or sell and hold is not really what I would advise to do. Let's see what's going on here. Yeah, I think this is going to turn into a bigger corrective structure. Just could take out the high and then drop it. I think we have more downside potential. What else can I say? Well, let's say this. If you really want to trade today, you want to take out this high for potential longer term buys. And I say potential, but because this is definitely another thing what could happen. You know, we can just keep extending this structure here all the way. So just be careful. Yeah, I'm not going to go into more detail because then I'm just going to end up with a lot of scenarios, and that doesn't help anything. Aussie dollar. All right, that was the one I get questions about, and that's fine. And I will explain to you why. First of all, the statistics don't change. We are in the red, and we've been going further in the red. So what does it mean? Once again, if you sell, manage it closely. Can it accelerate way lower? It can, and then go ahead and you have a tremendous trade. Keep in mind that this might happen real quick. And just to show you an example of something I was saying many times before, it took a little while for people to get convinced. I said this move here, sorry, let me recap. This is euro, of course. This move is not enough. It's not enough to correct this. So in other words, we're going to extend. This dropped, okay? That doesn't mean you can't take the short. I'm not interested in, because this turned into a phenomenal short, but it could be something like this too. And then you're out of the trade real quick, or this and then you're out of the trade real quick. So in other words, I'm preparing for the buy. So this I let go, and then I take this one. And that buy, I can pinpoint my entry a little bit better than I can do it by means of the sell in terms of risk reward. Keep in mind, this was the minimum target, this would be the risk. Then you end up 1-to-1, maybe 1.5 to 1 risk reward if you want to trade with more than 90% probability. And that's what I do. So I have no reason to start trading with less than 90% probability. That's just a waste of my time. So what I do, I sit tight, I wait, and then I see the buy potential coming up, and then I have a 90% probability of success with a risk reward that's tremendous. And that's a rationalized risk reward. This wasn't, not according to my algorithm. If you have a different algorithm, of course, different rules. But that's not what I elaborate on. So basically, what we see in the Aussie is comparable to this. What does that mean for me last week? I had executed 2 buys, which turned into 2 break-even trades. Right now, I draw the pattern to be some kind of A, B, and a C higher, contracting, and 1, 2, maybe 3, 4, 5. But I also am aware that this is a 3, and we're going to see a 4 and then a 5, and then the snapback all together. So how are we going to trade this? Right now, I'm not selling it. I think this is the correction that was very messy. I already said we can take out this low. Well, that's what we did. This was not a buy signal, so what I needed was some kind of a response to new non-farm payroll. Ideally a spike lower than the buy, but it went straight down for new low, which means there is no buy whatsoever. Doesn't mean I'm jumping for the short. No, it's not, and I hope I just explain why I'm not doing that. But what can we do now? First of all, if you go to lower time frames, you know, these are minor corrections, and you can definitely trade it. Just make sure that you move into break even once you take out the low. So if that repeats itself later today or probably early next week, you can do that. Bring it to break even once you break the low. And I will still be focused on the reversal, and now I will focus on the reversal. That will probably be more impulsive, which means there will be a quick buy. And when I mean a quick buy, that's a buy, hold, and it will reach the target real quick with a very interesting risk reward. Bigger picture, nothing changes. I mean, we have been on top of this all along, but I'm not anticipating this to drop all the way right now to this low. That would be very, very surprising, and statistically close to well, less than 10%, so to speak. And then I'm being nice to the statistics. So this needs to correct in a more mature way before anything else happened, and that's on a daily time frame, which means the 1 hour will present a tremendous buy opportunity. And up to that moment, you can keep selling it as long as you manage it accordingly, which means test the low, bring it to break even, to say the least. New Zealand dollar. Well, this is turning into my favorite pair. And what I mean by that is for next week, this is really setting up in a way that, well, it's nice. The market is good for us because this is how I look at it. We're extending lower, but also the statistics are really getting in our favor. And this actually, the New Zealand dollar is one of the most reliable pairs when it comes to the majors in terms of how it shows a respected market dynamic. It shows not many extremes within. So what I'm going to look for, well, once again, you can keep selling whatever you want as long as you manage it. But I think that this is the first attempt of some kind of a wave A higher. All right, what was I looking for? The non-farm payroll? Very simple. You saw this. So what I told my traders is, let me go to the 15-minute to show you. This move here is corrective. So in other words, if I see spike lower and then the buy, I'm definitely in the buy because that has a potential to trade a 4-hour fractal higher, and that's the one I want to trade. So why didn't I sell it? Because like I just elaborated, this is my rationalized target. Well, that was not enough for me to trade because that could be spike lower and take me out. Now, we can come on with all kinds of scenarios, and that's fine. I just want to emphasize I'm right 90% of the time. So in other words, I'm perfectly fine missing a trade because that's usually when I'm wrong. And then I just really enjoy the day, basically. So, you know, I didn't participate in it, and I don't worry about it because it's simply not a trade for me. Short term, of course, this is a phenomenal trade, but I would like a trade like that with just a few pips to cover for the minimum target. I like to trade such moves without a news event. For a news event, that's just easy to get whipsawed by moves like that. So what I'm looking for now, I think this is going to reverse bullish. So let's just play it safe. You have this trend line. As long as it stays below this trend line in terms of technical classical analysis, you might have those minor pullbacks and sells, target the low and enjoy the day. But the real money will be in the move like this. And that's what I will be looking for. Dollar CAD, doing good. There was not something we looked for last week. We said it's not ready yet for anything. But the fact that we extended high is phenomenal. This looks very much like a motive wave. And that indicates there's more to come. Which means I think this is square wave A. I already explained several times that this can easily come up and then come down. But if you want to trade the continuation of this move, we need more correction. So this might actually turn into a very nice move, simple classical pattern, some kind of a flag, and then the next move. Because keep in mind what we said last week, you want to see something like this, to say the least, 1, 2, 3 higher. And once again, the daily time frame, I said this is a very likely pattern ABC, and we just continue higher once again. So sit tight. The dollar CAD needs some correction here. Right now we're a little in the middle of nowhere because I assume this to be a wave A. We're basically in the middle now, so I'm not buying, not selling. I'm just waiting for this to mature. This is ideal, of course, but we know we can expand and come down, and then we buy. There's nothing else I can make of this right now. This looks actually very good, but we just have to be a little bit more patient. Dollar Swiss. Well, this is a potential, well, let's say this is an example of the New Zealand dollar, what I'm looking for, right? Take out the low and reverse bullish. Also, good example of why you have to manage your stop once you hit the low. We're making a lot of bottom information, although this is, you know, the inverse of the other dollar pairs I just covered. 1 hour time frame. Don't be fooled. This has several patterns, but if you want to buy it, I think this is one of the dollar pairs you might want to buy because of the bigger picture. We already have a clear 3-wave pattern lower. Let me emphasize that once again. 1, 2, 3. I think we have more. We have more to come in terms of bottom information. I wouldn't be surprised to see this turn into something like this. But this is really. Now I assume a lot, but I assume that based on you know, on my experience. But that's not something that's what you can trade. You need it in the end. You need a probability and risk reward. So let's put back the trend line. Make it simple. Classical technical analysis. If and only if this makes a minor flag or a serious flag, a 1 hour time frame flag, then I'm looking for the buy. And that might be the dollar pair I'm interested in buying. That's because, as I elaborated, the dollar Swiss has potential. But yeah, keep in mind that this is just a trend line. That doesn't mean nothing beyond visualization. Very possible too. So wait for something like this before you buy, and then trade the continuation of this move. Silver, I think is not done yet. I mean, there's not much room to the downside, and then we can make a loss for a little while when it comes to mining cost and, you know, the business of silver. Think about what happened to oil. Don't assume too much because of production costs and something like that, because that's really how people kill their account. If you trade CFDs, you're going to pay overnight. If you're in a big business, if you have any experience in investing, you know, one thing of investing is that you sometimes have to invest, which means you might also have a position in the negative for a while before it turns into positive. That also counts for mining. But fundamentally, this definitely is going to go up. If you're able to buy real silver, I would say this is the time, because then you don't have the cost overnight. But technically, this very much looks like something like this, come down and voila, back up. Definitely look for buys. Bigger picture, this is buying. There's basically one direction. Same thing. I'm not selling it at all. But if you really want to sell it at all time, bring it to break even when you hit the low. But it's definitely not my advice. Let me emphasize that I'm not interested in selling silver at all. Gold, showing the same thing. Bottoming formation. It doesn't really want to go down, doesn't really want to go up, which results in a sideways correction and then most likely that move. And these pairs will move in harmony, silver and gold, because the correlation is definitely going to kick in, or it's already kicking in right now. All right, that's it for me. I hope I answered the questions. I'll be back during the week if I see an opportunity. I noticed that what I said with Aussie dollar was a little confusing for several people. That's not the point, but at all times, like I said, if you don't understand what I mean or it doesn't make sense, then don't trade it. We traders, which means we are using the way of least resistance. Don't make it harder on yourself. If you don't see it, don't trade it. Have a nice weekend. Safe trades next week, and bye-bye.